afternoon, everyone. Thank you for attending this webinar with Ramakant Sharma. He's the co-founder of Live Space. Just a brief background on Ramakant. He's a graduate of IIT Kanpur. Then he did his MBA from Indian School of Business. His work experience includes being the Chief Technology Officer of Myntra, along with Mukesh Bansal. And he was the one who told me that always invest with Mukesh. Whatever he touches turns to gold. And also, Ramakant is also a prolific angel investor. He has invested in over 50 investments. Some of his famous investments are Topper, PharmEasy, and Lambda School. And he has many others. And I try to follow him on an angel list as much as possible. And with that, thank you for taking the time, Ramakant. And we have people from Brand Capital as well as the wider response. I already introduced you to Siva. He's the CEO of Bennett Coleman. Sammy is the CEO of Brand Capital, and there'll be other directors joining in as we go through this conversation. So
Thank you.
Not much ado, I just wanted to first touch base on your business, current business, and if you could tell us how COVID has impacted the home improvement sector and how do you see it coming out and playing out over the next 6 to 9 months?
Absolutely. So good evening, everyone. So I think this is a sort of an interesting situation here from our business point of view. So what we do at Livispace is, in a way, we are a three-sided marketplace, which essentially means we sell home renovation, home improvement, furnishing goods, but not directly to the consumer, a typical marketplace like Amazon and Flipkart would do. We sell these goods through intermediary like designers, architects, or contractors. So we call it as a three-sided marketplace in some fashion, where I think the shopping is, or the shopping cart is co-created by the interior designer and the consumer, and it's an assisted sale in a way, very solution-centric sale. So somewhere I think the insight and the consumer belief we started out of India is consumers are literally looking for solutions. People wants to buy bathrooms, not a shower unit. They are looking for a kitchen, not for a kitchen cabinet or a handle or a chimney. They're looking at a nicer living room, not a piece of couch. And when we start selling solution and nicer looks, we need this designer thing. And this hypothesis worked well. Last 5 years, we really scaled well. Second assumption in the business was the durability of home goods in general very high in India. We do not replace these things more often. To really get the CAC to LTV equation better, we need to sell bundled products. So for instance, take example of a living room. If you sell a living room, you're selling at least 8 to 9 products or SKUs in a one go, which is same as finding 9 repeats of a simple furniture e-commerce company. If somebody buys you a kitchen is more than 100 SKUs sold in a single transaction. That solved the massive repeat problem. In fact, the first transaction on we had higher repeat than most of the internet companies in the country, because the SKUs sold are on an average basis 50 plus in a first transaction itself. And it is really, designed and sold through a assisted process of an interior designer. So this was a good journey going on. Somewhere during the March, we struck this unprecedented thing and sort of a situation that we had to literally pause the operations because it's lockdown. We cannot move the goods from one place to another. There are restrictions around movement of e-commerce goods in general. I think only essentials were allowed, and we were not classified under essentials in any ways. We are definitely a sort of a lifestyle purchase, not an essential purchase. So that is the time we did various theories around it, a W-shaped recovery, V-shaped recovery, U-shaped recovery, 12 months to 18 months recovery, 15 months recovery. And I think we had a dozen projections and models around to really address the business. And this was a lots of modeling unknown kind of a situation. So we honestly as a business did little bit optimization on a cost, but the revenue side forecasting and projection was more or less modeling an unknown kind of a situation. And the interesting phenomena we observed is all of a sudden two things happened. By and large, we started living at home or working from home.
Yes.
Second is the fear and the safety led to a point that everything we wanted to order online as much as possible. And third, if I would add, little bit shift from unorganized to organized. You really wants to work with trusted players in this kind of a situation. When there's enough uncertainty on money, life, and everything. So somewhere I think April and May, our business was more or less in a pause situation. Very few inorganic referral orders, and then around June second week, lockdown legally lifted in most of the cities we operate in, and I can deep dive the cities. But I think since then we have seen a massive recovery in terms of a demand. And chatting with Vish and the team here, that I think this is two things happened together. One is real of home. You really want to make changes in the home, like you want to have a nice place from where you can take calls, sort of a a study room space. The value of kitchen is also changed. As saying, uh, I think user of the kitchen and the usage of the kitchen was also changed. For instance, we need now more storage. Sometimes the family itself is cooking. So the kind of functionality, aesthetics, living there, a changed. One more interesting thing is the alternate to online businesses and to our business was primarily unorganized supply in the form of architects and carpenters. That's also gone a quite bit disruptive or a little bit not reachable in a certain sense. Less trusted operations and an unorganized system is much more moved to player like us. At least we are available on internet, slightly more organized. It's a industry in itself is unorganized. So I think that led to a shift of demand towards us. We are also now, I think, quite a bit challenge on delivering the demand. It is the entire COVID in my mind is a supply side disruption to by and large to almost everyone, not a demand side disruption. Demand just change the channel. It's a shift of channel. Instead of shop, it moved to online, organized to unorganized. Demand, we are more or less consuming same things, barring very few things. So I think fashion and those things are still yet to pick up. But there is one more thing has happened, which is little bit uncertainty on the consumer side on financials. They don't know whether they can predict their own cash flows and take such kind of large purchase calls. So we help them with easy loans, subvention schemes, free cancellation schemes, like no question ask cancellation. This was typically available in e-commerce, but we offered to our consumers. We continue offering that. Third thing, I think the reality on ground is our business is more important to the homes which have come into position rather than the new home sales. So new home sales is a fresh commitment, but most of our consumers have a situation where they're paying EMI. The EMI has started due to position and they're paying rent. So even in a financial uncertain situation, they want to reduce at least one cost of these two.
Yeah.
So getting home renovated, at least the new home with the very basics, and much more to it. We need to really fine tune some of our offerings pretty fast, like offer the basic kitchens pretty fast, faster tax, like something which we could do 8 weeks, we started delivering in 4 weeks, loans, no question ask cancellation, kind of policies, and lots of communication around safety that each and every worker has a temperature check, their masks, their sanitizers. So the cost of operations have also increased for us. So combination of all of this led to a point where we are seeing a good chance of recovery coming back to our February numbers somewhere around September and October.
Oh, that's very good.
So this is something which I think uh, we didn't foresee that faster recovery, and some of the parallels uh, in US and European countries. I think the home consumption and couple of data points where the stock prices of home related companies has gone up. It's all across, like low sales has increased, Wayfair share prices more than 30% up. So I think this is a more or less global phenomena where I think investment around home has increased.
So when you say that, since the user has changed and there is a lot more depth in the purchasing decision, has the average sale price or the average contract value gone up from what it was before COVID to now per apartment?
At an average level, is still lower, but the people who afford are buying more, and there is a large number of crowd who is just want basics and move in. That EMI and rental case, like they are just buying a very faster movement of the goods. So I think
So
what
they're
you're
taking the
saying is
basic one, which doesn't require a lot of installation time.
absolutely. So I think our average is more or less the previous number, but a serious design and a full home, we call internally that is a full home design project, have got on a higher side. Now people are actually investing maybe up to somewhere between 20 to 30% higher.
Got it. And when you said there is a shift from this unorganized because there's lack of carpenters available and they're coming to you, your channel, do you think this is a permanent shift or some of them will move away when those carpenters show up?
It's an interesting question, Vish. Honestly, actually a great question. This, I think I keep thinking, is it a permanent? My sense is it's a hypothesis, first of all. We do not have data. So claiming permanency around this applies to many things. Education online, healthcare online, home renovation
Grocery,
online,
even grocery.
grocery.
Yeah.
And this is a hypothesis. My sense is all of it will not be retained. It will go back to offline once we go this. But I think at least a 30-40% shift will retain. For instance, like now maybe it's all coming to us. Once the offline supply got back to its normal, I think a lot will go back, but still we will be 30-40% higher than the pre-COVID level because the habit creation and the experience of online deliveries now much more larger user base has experienced us, and kind of the comfort and trust has gone much more higher. Like somebody who was so apprehensive of buying a paint on internet has got paint done through us. We tend to assume, and the paint experience was, let's say, good, tend to assume that the next time whenever there's a painting requirement, he or she might not look offline solution. So I think a part of it, a good chunk of it will be permanent online behavior built in. Going this completely offline again. Third thing, I think from business point of view, since you raised such an important thing, I think my sense is in a very different context, COVID has made internet companies from a P&L perspective, because by and large, all the new age modern tech companies were still struggling on a huge marketing cost, CAC, and unit economics, lots of profitability issues. We are, as a country in general, was taking much more time to get a profitable P&L on the internet side. This time, what has happened is the CAC is reducing and sales is increasing. So
Yes.
I think most of the companies, not only us, will come. And one more thing, there was lots of fear around not able to raise capital kind of a situation. So lots of optimization, not only us, I think I know a bunch of companies, more than 20-30 companies in my portfolio and friend circle who did it. So I think we have a better P&L equation now than It was
Before COVID.
before COVID.
Yeah.
The natural value and appreciation of the value proposition itself on selling internet is appreciated much more. In the time of when safety is a paramount concern and you really wants to buy something which is trustworthy, if you wants to return, you can return on a click. Those kind of a service and things, I think we were offering these things last 10, 15 years in the country, but appreciated less. Obviously, the volumes have increased with time. And I'm not saying it was on an absolute scale, but relative scale, the appreciation is much higher now. And which is translating to a very healthier P&L to all of us. I think in some context, it will make the internet industry also for the country.
So just to give context to the audience, I mean, Ramakant and Anuj started LiveSpace end of 2014 after spending a few years in Jungle Ventures and different. I think Anuj was with Google and Ramakant was with Myntra. And in February, they clocked $22 million in orders per month. And they are at 70% as of August. And I think as for the latest projections, they should either reach that February number either in September or October. Absolutely. And this is due to two things that Ramakant said. One is that there is more engaged purchase. People want to get in. And also the alternate is not available. So they're all coming to their channel. So in terms of business going forward, do you see any consolidation or you see this many players? Because we see a lot of players in home improvement just in the market like Bangalore. Or do you see that, this will get consolidated over a period of time?
Which I think, again, an interesting question. My sense on this industry is...
We have a vested question because we have investments in many, so we would like them combined.
No, absolutely. So I think my sense is by definition, it is not winner take all or winner take most. These businesses, in my opinion, sincerely, profitably can grow and can exist. This is quite a bit operations plus, larger team, and up to a certain extent, it's not only what I should say is a consumption. In certain contexts, it's an investment also. Meaning when somebody is buying a 1 CR worth of home, in their mind, the 10 lakhs extra for interiors is an investment. It is not really linked to the consumptions. People are taking loan to get this, along with the mortgage loan. I think this is a serious purchase and larger wallet share of every consumer goes there. And this will continue because Indians by and large love a home. Home is asset in mind. Nobody thinks it's a liability from a mind perspective also. And I think, my sense is it has been largely organized, fragmented for a reason. We are trying to organize it and take a chunk of it. But I see good examples where it has consolidated a bit in home as well. The biggest consolidation has been done by Asian Paint in the industry. They are almost 35% market share of a paint. That's the largest one could do in a home service. But that's not easy. I think it's got listed before I won. So it is a company which has taken many years to get that kind of a market share of a paint alone, and paint is just one service, which in my opinion is not more than 70,000 to 1 lakh for a home, whereas the kitchen is 3 to 5 lakhs. So the kitchen market is 6-7 times of paint market, and taking 35% on kitchen alone, or a wardrobe alone, or a furniture alone, it's a huge industry. And I genuinely think that it will remain fragmented for a good amount of time, but a decent size of companies can be built in the space and they can coexist easily.
So at 22 million, are you number one right now in the online space?
I think not only online and offline, also we should be number one in this home improvement sector because it's a fragmented. There's no large company.
Yeah,
I think I'll not be able to recall a company of a decent size in this space. It is actually a fragmented industry, and one of the first attempt is we.
The space food in Pune is pretty large, right?
Space food in Pune, I think we will be, I don't know the exact numbers, but I think we'll be 6-7 times bigger than them. So what I'm trying to hint is, and maybe I'm slightly wrong here and there on the numbers, but I think there is no large such company which can claim that, I'm the HDFC Bank of this industry. That is also a large financial services, but I think home is even much more fragmented, and we are yet to see a larger organized players in the space. This is definitely a non-trivial supply chain, non-trivial offering, and it's not going to be as simple as an online gaming company. This needs many nuances to it in terms of operations, supply chain, ecosystem participation, OEM vendors, because you have to start from plywood vendors to hardware vendors to paint to curtains to flooring. It's a large, like, even the component providers in itself are decently large companies. The companies who just make plywoods are listed. The companies who make only the curtain are decently large. So my sense is, from a wallet share perspective, we not only I'm not saying not only India, I'm seeing this data all across the world. I think the home has got a huge wallet share in terms of investment and building multiple to short answer to your question is, I think there can be multiple companies will build their niche and solutions and offering around they're good at, and they'll coexist for a decent period of time. And so early that I think the consultation doesn't make much more sense at that early stage, where I think the synergies are not clear. Like what you are considering is also not clear.
Yeah.
So those are the situation we stand, in my opinion, today.
Got it. In terms of, you have centers across the country. If you could tell us which center is more close to pre-COVID than, let's say, other centers in the country? Is there?
So I think the fastest recovery we have seen is in Hyderabad and Bangalore. And now we are seeing a decent amount of recovery in Gurgaon. Bombay is the slowest because they had a major issues tackling with the lockdown and things. So I think relatively southern part of the country, Bangalore, Hyderabad and Chennai had and this was actually maybe a little bit selection bias as well. These are the cities which were delivering the larger portion of our online sales even before COVID. We have a larger presence in we are a Bangalore headquartered company. So Bangalore is anyways the largest portion of our sales. So I think the combination of penetration of internet, trust on internet, brands, and my experiences, I think that is also a little bit what I'm trying to say is very common. Bangalore and Hyderabad makes most of the internet companies. So I think the same trend exists in our space as well.
Got it. Okay, with that, I will let the panel ask any questions that they have. I will ask a question at the end, but Siva, if you have any questions, please go ahead.
Sam, you go ahead.
Ramakant, thank you. Vish, thank you. Siva, thank you. I have a couple of questions because we are so proud to be a shareholder in LivSpace. It's an absolutely wonderful concept. I totally have to agree with you that it will remain fragmented, because in the United States, where I've lived majority of my adult life, this thing exists, and this has existed for quite a bit of time. New York City itself has maybe a half a dozen. And then it's gone down a path where I'm a designer, I create my own type thing. A few designers come together and make their own. So it's become that way. Each one is profitable. Each one is, so I have a couple, 2-3 different questions, Ramakant, if that's okay. It may take 5 minutes to answer. One question to you is, borrowing from what is happening in New York and San Francisco, why can't 7, 8, 10 interior designers, why can't you incubate or curate a dozen designers in different cities, Bangalore, Delhi, Bombay, they come on your platform, they do their designs through your platform, you do all the fulfillment, and they get some small percentage from you, but you bring all their client base into you and you supply. Basically, you get the GMV, they get a small percentage, they get business, all is well. That is happening in America, and Wayfair is looking at it, looking at exactly this model in America.
Maybe little bit interrupt. We are doing this since 2018. We have 4,000 such participants who get commission and we get a GMV. That's our largest portion of the sale. And we have expanded the same model to Singapore. Now we are doing this to other Southeast Asian countries, Australia. In fact, that is something which we are rolling out soon. United States also we are thinking and analyzing. So our model is fundamentally in the back end, we are a supply chain and a SaaS company in a certain place. So this software tool of design, 2D design, CRM, project management, payment collection, and a supply chain catalog available digitally on a cloud native platform offered to interior designers free of cost.
Yes.
They can set up their studio on our platform.
Yes.
We do lots of marketing, digital marketing, collect the consumer demand, and we do have assignment algorithm like Uber, where we assign these leads to a most appropriate interior designer studio basis on a sophisticated machine learning algorithm like the studio's availability, the kind of devices, interest, scope of work, zip code. These are the parameters. Basis on that, we assign a customer to a studio. A studio completes the design cycle on our platform. We book the GMV. Gross margin and a take rate from the supply chain becomes our revenue. We share a percentage of revenue with the studio as a commission. That's exactly is our model.
Now, the reason why I thought about, I'm so glad to hear this, because you addressed the point of fragmentation and the fact that this is going to be somewhat fragmented going forward too. But if you look at it this way, you become the operating system, the OS, the iOS or the MS-DOS or the Microsoft Windows of the entire design ecosystem, and you control it from there. And
Sammy, when they met Ratan Tata, he told them that your engine is for the not so famous designer to become famous.
Yes.
Absolutely.
Yes.
So the most famous doesn't need you, but the not so famous who is struggling to get consumers who have 2 or 3 can get 7 or 8 using your productivity tools. And this was the sentence to them. And, I think I remember Anuj saying he was the only guy who got the entire model in less than 5 minutes or something.
So in the beginning, when Adobe launched, the best designers, editors did not use it because they could do in-house. But eventually, even the big ones will have no choice but to use it, because otherwise they can't go outside their neighborhood, right?
Yeah.
It's all a matter of how quickly you scale, that's all.
Yeah, so we actually, if you look at the vision document presentation, the first slide is of the home renovation, which essentially means bringing the designer, the OEM suppliers, and the consumers together and connecting them on with a bunch of tool and supply chain. So I think in between, platform remains by and large as a technology play, which has its own governance. The studios can spawn within the platform. New studios can be created. Existing studios can join us. We are creating entrepreneurs and we are joining entrepreneurs there. At the second side also, on the supply side also, the interesting fact is that is also massively fragmented. Like, any large sofa making company or a bed making company or a lighting company, the actual OEMs, like somebody makes a nice couch, take a company named Gulmohar Lane in Jaipur. This couch cannot be sold on Amazon. It can be sold only through a designer network.
Yes.
So we are enabling a small micro furniture manufacturer as a supplier through a design studio. Design studio can see all the 4 million SKUs we have listed from various suppliers.
Yeah.
And the designers generally in the offline world have a printed catalog. Instead of that, they have a digital catalog within the same tool. So we call our tool as a Canvas. Canvas is the name of the SaaS tool we give free of cost to the designers. We are introducing this tool to design schools, architecture schools, and this tool overlaps with a bunch of other companies like AutoCAD, Adobe, SketchUp, because we really don't want to replicate 100% of the AutoCAD, but a certain portion of the AutoCAD tools which are relevant to interior designer, we have put in them on the cloud and a web. Most of the AutoCAD tools are desktop tools. Then I think on the visualization side, there are many companies who are doing AR, VR, this, that. So we have a visualization angle. Then there is CRM, there's a project management. The payment cycle of the industry is also non-trivial. It's a virtual wallet of a customer and a wallet of a studio, wallet of a furniture vendor, and the platform auto settles the financials as well and creates a P&L of a project. So
Yeah.
I think a bunch of utilities and a platform, and you're so right that it is the approach is operating system, which in a way has a chance to become more condensed and most take all kind of a tendency and global. That's our aspiration, and that's where I think including you and all the investors and us are aspiring for. Yeah.
I think the valuation that you can get also is phenomenal when you move in that direction versus this direction. I did tell that girl in Outlook, I tried to explain this to her and I don't think I succeeded. But I did tell her that there has got to be a separate story to view LiveSpace as a software company, essentially, SaaS software company that creates a new life to this entire industry. And that should be told, that story should be told. But we should work on that separately. That story should be told in a platform like Google, in a platform like Wired magazine, digital magazine. The thing is, because we should view it as that, not just as a home improvement in a totally different context. And that I would very much like. It's very powerful.
Absolutely, you nailed it. That's the value of the company, net. Yeah.
Yeah. And my second point is, you see, there is in every one of these crises that happened after 2008-9 crisis, and I also now have studied about the Spanish flu that happened 100 years ago. After all this, a lot of people move. A lot of people move homes. I don't know why. I still haven't understood the full psychology why people move homes. One thing is people are reducing their burn rate. They are trying to save some rent from one flat to another. People are moving. Anytime, I used to say this, when money is in motion, you can grab it for our investment business. In your business, when people are in motion, you can get business because people are moving place to place. You have a chance to get a piece of business. Now my point is, have you thought about combining what do you do with rental? So I'll give you an example. My personal assistant, she's moving. Okay, her apartment they own, they're going to buy a new one, whatever. They're moving for like 2 years. And she's saying, sir, why should I buy furniture? Can I rent it from LiveSpace? Because she knows LiveSpace is in our portfolio because she's seen it somewhere.
Yeah.
And I said, I don't think you can rent it from LiveSpace. I think you mean Furlenco. And so my question to you is, are you thinking about offering some kind of integrated rental for periods of time for people?
I think the short answer is no. We are not renting yet because our first value prop is becoming a operating system and spawning studios and offering them more and more technology and a supply chain is taking most of our resources. You can put this way. We are not really able to build that thing because little bit that belief that we have not done yet the operating system part fully yet. So we want to launch that into a couple of countries first and stabilize and make it really, as you rightly said, we need to really tell the story to Google, position ourselves that. So once we stabilize and mature that part of the business, I think then the alternates towards consumers can be as and the word says every company has to be a fintech company. So whether we can rent the things We can find, fintech alternates around it, attach NBFCs, you can finance the because it's a lots of capex. We need to upfront finance.
I mean, one thing you can do is if Vish owns a furniture store, 5 furniture stores in Bombay, Vish can rent it. The inventory is on Vish's balance sheet. You are simply the tech. You're renting it. You're getting a spread. You're cool. You are asset light. Vish has all the asset on his balance sheet, right?
I think from a customer perspective, great insight. We think there is a genuine use case. As a company, we are not doing it yet. To answer a question, we'll definitely think through this. As of today, our focus is really establishing ourselves an operating system so that tomorrow, if we need to really configure Vish's store on the platform as an entity, we should be able to configure.
Yes.
And somebody should be able to take it out.
Yes.
I think when we look at them, we look at a problem, whether this problem can be solved by adding a capability on the platform, and the consumer use case is a derivative use case, or maybe by learning from the consumer use case, we enhance the capability of the platform. So today we are not really, we are onboarding furniture stores to the studios, not the consumer to rent. So rental is a option to consumers is currently not available. But I think this is a legitimate use case. I haven't studied the market size and thing, but must be good, decent size.
Yeah. Good. Thank you.
I think this is thanks. Great questions. In fact, I think this is really the core of Live Space, being an operating system kind of a question. Absolutely great question. Thank you.
No, it's your business. Yeah. The first day, first or second or third week, I joined this job. I saw this business. I've been in the real estate business before. And I kept asking the question, we are making all these buildings and apartments. Why shouldn't we furnish them? People are going to furnish them. Why are we losing that margin? I kept asking the question many times. And when I saw your ad once in our paper, all those thoughts were going, and I was chatting to my team. I really love it, personally. I mean, we have so many companies in the portfolio. We all relate to different companies differently because of our own personal knowledge or affinity. And your business is something, it's a beautiful intersection of technology, home, furniture. It's a combination of things. It's all, everything that is a compulsory spend for every home. There is no option. It's a compulsory spend. So it's a, it's a powerful mix.
Nicely put in. Thank you. Thanks, Samir. Thank you.
So, Vish, I didn't have a question, but based on what Samir said,
yeah.
So I didn't want to ask, but I had to ask. See, Ramakant, you and your partner obviously also come from what we call an algorithmic background, and the idea is that whereas Live Space is all about bespoke and customization, because each individual needs are very unique. So, if I may ask you, what percentage of your business, if you were to saying that the demand which comes in, that how much variation you have to do? Can I say, for example, 60 to 70% of business is broadly standardized, and 30-40% you have to do a lot of customization, or 100% of business is all about customization? What is the percentage between the two?
Answer a question, maybe 98 or 99% is standardized, 1% is not. So I think the number would be around 99 today.
Wow.
How we did that is we defined a 3-seater couch.
Yeah.
There might be a case when somebody needs a 3.5-seater couch because there is a 6-inch extra space in the home.
Yes.
That is a one case. So second, bed customization is next to zero in our case. Now I think that is helping shaping the mattress industry also. Because I met many mattress brands, they're saying I have 100 SKUs. I have not seen 100 sizes of beds. It's only 4 sizes of beds, which actually cater almost 90. Now I'll say bed 0, so 100%. The of the system is we have really understood the consumer demand in such a way that when I say 99%, I think the choices to the consumers are given on the order of 4 million SKUs, which means on an average, one 50 to 170 colors of kitchens, at least 50 plus type of designs, and then you do a multiplication algorithmically of these problems, they becomes a 4 million choices.
Wow.
The consumer is asking to us, they are asking what they need. In their mind, they have bought 100% bespoke, nicely looking kitchens, and our kitchen looks maybe an order of magnitude beautiful, aesthetically better than a many kitchens or average kitchen in the country. The beauty lies on the supply chain and cloud, and really AI based defining these colors and creating these components. Like we really, the simplest, the most bespoke solution has been got standardized at the back end. That's the IP of the system. Like you think of a kitchen, every kitchen is different we deliver. So there's no two kitchen who are same. But all of these kitchens have come through the same engine of supply chain. They're real-time setted components. The color choices are rule engine based. Like you color a violet color door, it will suggest you another door color which actually scientifically matches. Colors are science. And designers and consumers have overwriting power on the technology tool. If you do not, it's like the analogy will be a Google Maps says a driver in Uber that this is the best path you can take to go to this place. But the driver or the customer can override Google Map and take alternate path.
Sure.
So we do a very guided kitchen design basis on your need. Third is we have done good amount of science and market research. Beyond 4 million choices, it's a humanly impossible to process. We need to write AI engine. Like red color is also 60 types. Beyond a point, I think the bespoke, which human beings think, they think 50 choices are bespoke in itself. And I think our first catalog was 72 designs of double bed. I thought there might be a person who will ask 73rd for sure. After 72, we could clearly see that consumers are able to select one in most of the cases. And then obviously the 72 becomes 500 with time. But I think there's an optimal torso of the choices on the back end. And the front end is just a permutation of those choices on the front end. So that way, I think it's a mass personalization. We rather call it, rather than a bespoke, we call it a mass personalization and mass customization on a framework.
Thank you. Thank you. This is really, how do you simplify internally to deliver complicated solution externally?
Yeah.
That, I think in that we are not able to solve some products, maybe those light around 1%. 1% products we need to really create bespoke. And when I say bespoke, we need to design, prototype, and create. And cost of that bespoke is relatively higher. But the economic situation as a country is the bespoke is cheaper. Basically, if you analyze it with the fashion, the bespoke shirt has to be costlier than the ready-made shirt. But in furniture, it's a reverse because the carpenter is very cheap and consumers are able to buy a board and allow carpenter to work from home. So I think that 1% choice was not economically wise choice for us, but we have to do that in the interest of the consumer experience. So we do, and we do it almost like a
Giveaway.
kind of a price. Yeah.
Loss leader.
Thank you. Thank you. Thank you so much.
Great. So any other questions?
No, I just want to say Ramakant's business has a lot of IIT inside the furniture.
Both of them are from IIT, both the founders.
Yeah, I and Anuj both were more of a, like Anuj was with Google, I was running engineering for Myntra and a couple of SaaS companies. So I think both of us are software engineers to the core. And the problem statement we definitely has picked is more fancy. So we need to little bit put a good balance of aesthetics and scalability and economics around it. I think that's pretty much our DNA as well inside the company.
Great. Thank you, Ramakant. Thank you for taking the time speaking to us. It's been a pleasure listening to you, and wish you all the best.
Thanks,
and, last thing I would say is, it's one of the few companies has raised money during COVID, so it's not an easy task. And so thank you and congratulations again.
Thanks, guys.
Thank you so much, Ramakant. Thank you for coming today and talking to all of us. And thank you for simplifying the business model for us. And so it really gets an insight of, and obviously we all, the whole idea of this conversation is to, there are about 85 people right now as we talk. And the idea is to inspire for us to learn. And there have been a lot of learnings from the various insights you shared with us. Thank you so much. Sammy?
Thanks, Shiva.
Yeah.
Thank you.
I think every one of these things we do, I think we have done 25 or something thereabouts now. I've learned so much more about our portfolio from these capital conversations than in any other way. Because here, we don't structure everything. I didn't know what I was going to ask you. I didn't know we were going to talk about an operating system. But these ideas come to us from time to time, and then they add fuel to other things. It's been great. My only request to you is keep on. Don't look back at all kindly. You could be a multi-billion-dollar company. I could feel it. You could be a multi-billion-dollar company. So don't look back ever, please.
Thank you, Sammy. Thanks. Very encouraging. Thank you.
Thank you.
Thanks, guys. Thank you, Shiva, Vish. Thank you.
Bye.
Thanks, Ramakant. See you.